You thought the apple tree was good. How about apple to that tree? Hey there, welcome back to my channel. I'm mixing up my content again and bringing somebody new on the channel, and so today I have Clinton Miller. Now, if you didn't catch in the intro, Clinton is my brother, and it's really good to work with you, Clinton, here at Pleasant Wealth. Clinton's also an advisor and has been with Pleasant Wealth for 6 years or so?
7.
7. There you go. So it's all family business here at Pleasant Wealth. Today, what we're going to be talking about is the mortgage, which is one of the main pieces of debt that people have. And they have a lot of questions about it, so we tend to be answering a lot of those questions. So I wanted to talk to Clinton about what he thought about the mortgage that we have and some of the reasons why we might establish one in a certain way, and then also how we might pay it down faster. So, Clinton, good to have you here.
Thanks for having me.
As we think about a mortgage and retirement, oftentimes it is said that we should go into our retirement debt-free. Do you agree or disagree?
It depends. How's that for an answer?
I like that answer.
Depends on a lot of things. I would say it's a lot easier to budget for your retirement when you don't have that burden around your neck. You're always going to have housing costs. You're always going to have maintenance. You're always going to have taxes and insurance. But if you can get rid of that debt, it really removes a big burden on your often fixed monthly income.
A large change in that monthly income for retirement.
Absolutely.
So, and ideally, you would have your mortgage paid off as you're stepping into retirement. But that's not actually the case for everybody. Sometimes people are stepping into retirement and moving at that time and establishing a new mortgage. So just as long as you're budgeting for that cost and making sure that it fits within your income plan, then you're good to go. So how do you choose between a 15-year mortgage versus a 30-year mortgage?
It comes down to your lifestyle and sort of the plans that you have, and it does require sort of planning ahead a little bit. It's an interesting question to answer right now because interest rates are so low. So borrowing money for 30 years has never been cheaper, I believe, than it is right now. I've heard of people getting mortgages for just under 3%. If you can do that and lock that in for 30 years, that's a pretty good deal. But some people really like being out of debt. They don't like having that payment to make every month, and so a 15-year mortgage might make more sense for them.
We're all about lower interest rates here at Pleasant Wealth. It's a really interesting conversation to me to think about what it means to take a loan out versus just outright spending money on a house. So let's say I am the average retiree and I have a nice nest egg built up and I am planning to move, and I could potentially just pay for the house that I moved to. What you're saying with that, the interest rates are lower than ever, that this is a time where maybe we're leveraging those interest rates because they're so low, and maybe it's a better idea to get the loan versus just outright spending the money on the house. Is that what you're saying?
Yeah, that could make a lot of sense for a lot of people.
Yeah.
Absolutely.
Yeah. Interesting time, folks. The only time we talk about the interest rates being so low and that being a good thing is when it comes to the debt that you take on. All right, so let's say you've moved recently, you established this new mortgage, and you want a couple of tips or tricks in how you can pay it down faster. Let's talk about some of our favorite ideas for that.
So the first strategy I want to talk about is probably the most approachable and the easiest one for us to put in place if we're trying to save money and time on our mortgage payments. And that's to make BiWeekly payments instead of monthly payments. The idea being, instead of one monthly payment, you make 2 half payments every 2 weeks.
Yeah, so that works really well if you're the type of person who gets paid every other week and you're just lining up that mortgage payment, that half of a mortgage payment, with that every 2-week cycle that you're already going through. And the nice thing is that squeaks out 2 extra payments per year, but that 2 half payments equal 1 full payment, so that's 1 extra payment that you put down.
I wondered where you were going.
That's how it works.
Yep. The last strategy I'm going to give you is the one that's going to save you more money than basically you make a payment every 3 weeks instead of every month. So what you end up with is 17 mortgage payments a year instead of 12. And this saves a lot of time, not as much as the other strategy I mentioned, but it will save you a ton of money. What we call a bundle in the industry.
We like bundles. My classic one, simple Liz strategy is just to add, an extra $50 or $100 on top of your regular payment. But one thing to keep in mind as folks are considering one of these strategies to roll with is, does the bank always consider any extra payment that you make paying towards the principal?
Yeah, some banks don't allow prepayment, so none of these strategies are going to work in that situation. So
Yeah.
if you get a mortgage, it's one thing you could ask about before you sign on the line.
Definitely. And also, not all banks automatically calculate it as principal. They might think that you're sending in an extra payment to pay some of the interest paid. So you just want to make sure, whichever strategy that you're doing, number one, that the bank allows prepayment, and number two, that you're designating that this is paying down principal and not interest.
Absolutely.
Thanks for joining me on this channel today, talking about our mortgages, the standard debt that most Americans have, and how we can pay it down faster. All right, friends, that's all I have for today. Thank you so much for tuning in. I appreciate it as always. If this is something that you want to have a conversation with as you are stepping towards retirement, trying to make that decision of what to do with your money in regards to your house, happy to have that conversation. Go to our website, www.pleasantwealth.com, to start a meeting. And until next time, friends, you take care.